Hey traders, it's Crystal here. So it's about 3 o'clock on Central Time here. We're looking at the markets. What an interesting day today, right? We've had some pretty interesting rallies into the risk-on pairs. And as soon as Trichet kind of finished his speech, the market sort of took off, and we've had a pretty big risk-on day from there on. So I think that we're reaching some pretty interesting levels up here. We had some pretty good development up into the S&P as well. I'm gonna start with looking at the S&P first, and I'm gonna pull this chart out here. So as you guys know, if you've been watching the videos before, and without me, modifying yet any of these lines that we have here, this market has been kind of following this two trend lines in this ongoing heavy, sort of uptrend, slow but pretty steady. So if you guys know from before, we've been watching this trend line. I want to quickly go back, and I'm going to zoom this out a little bit, and I want to show you the importance of failed breakouts. And you can see how this drops below this trend line, and I'm considering this to be failures because when I draw a diagonal trend line, I usually look at this, where the market does the most touches to the trend line, and I consider that to be the most important one, right? So we're looking at this one as being our main upside trend line, and then anything that's below that, it's a failed breakout. So as it usually the case with the failed breakouts, when something like this happens and the market kind of climbs back above the trend line, you're having a squeeze up. And the one that we were all kind of worried about, and that's when a lot of people got bearish on the market, was when we had this drop up here. And we were cautioning at the time about the possibility of this whole thing being a fake breakout and the possibility of the market kind of squeezing up higher and retesting this right shoulder in here. The market did that, and then it moved up here, it came back down, found support at this very important horizontal lines, and now ever since we had that fiscal cliff resolve per se, the market gapped up higher, and now we're challenging again the highs in the S&P up into the 1470, right? And it's really interesting that we have a confluence here of this trend line with this horizontal line right into the same levels. And I'm going to zoom back in here, and we're going to look at this a little bit more in detail. As you can see, the market is pretty bullish today, and it looks like it really wants to rip higher. And the fact that this triple top in here, it's about to fail, although we haven't made new highs here above this high here. This candle here, it's a pretty strong indication that the market wants higher. Now, what I want you guys to pay attention to, and for the new subscribers here, I just wanted to say that if you haven't been watching, anytime you have this breakout, you need to have a continuation to it. So what we need to see from this market is tomorrow maybe a retest of this 1467 level, and when the market comes back here and retests this one and then takes off, or takes off altogether without even doing a retest. So if that happens, then this bullish breakout might be confirmed, and then the market could move freely higher to much higher level. And if I look at the weekly charts, and I'm going to try to do a fib projection up here, see if I have this set up. Probably not, but I think that give me a second here. I'm going to try to add one in here and see if I can do that. Let's see if this is going to work. Okay, there it is. So you guys can see that would be the level that where the market will probably try to go if and I'm measuring this latest leg that was in the market, and then we've had this perfect 618 Fibonacci retracement down into these levels. And now what's happening, if the market moves above here and closes above this level here at about 1475, then there is a very, very big possibility of this market shooting up for 1500 and 1530. This is extremely important, and I want you to watch this into the end of the week and in the beginning of the next week to have some clues up here. But if so is the case that this breakout, let me get rid of this fib so the charts are clearer here. If this breakout here ends up to be a fake breakout and we're having a bearish bar into tomorrow, then I would really run scared, because this market had a failure up here, and it's about to start ripping lower. So we are at an extremely important level in the S&P 500, and it needs to be watched in terms of price action. And from what I've explained so far, that's the two scenarios that I'm seeing in here, and that we need to pay attention to. Right. So that's in terms of the S&P 500. Let's go look at the euro dollar here really quickly, we were expecting the euro dollar from some of the charts that I've posted on the site and on this other sites. We were looking at the fact that this pretty bearish rejection here from the 50% retracement zone, I was expecting a move down here into the 127, and that just didn't happen. The market failed here, and it looks like we're trying to establish here an uptrend. I was thinking that the market might come back and reestablish this this channel up here, or maybe even move lower to retest the bottom of this channel. But it looks like what appeared to be a return into the channel and to the bottom here was nothing else than a fib retracement in here. So I'm going to go ahead and pull the fibs here, and we're going to look the other way now, and you can see that the 618 here was pretty well supported through this multiple candles, and the market should back up higher. Now if we're moving up higher and taking out the stops here, then look at the euro for a move up into the 34.40 zone, into the 127 extension. So be careful, you know, up here into the market, kind of challenging this this higher level. There's nothing else on the daily charts that would say that this is a short. You know, I'm sure there are some wave counts out there that could say that you know, this might be a second wave up, although to me it looks extremely impulsive. So I don't think that well, it's just the way it is right now. We're challenging this resistance line. I'm gonna actually, give me a second. Let's go and see it up here. So you know, we can go and move this horizontal line a little bit lower. And just because I want to do this, because this level, I think 32.65, 32.70 is more important than these highs up here. All these highs were failures. So and then you can see how the market, you know, it didn't even close above this level a few days back here. So, and all of these double bars here were major failures of this 32.60 level. So right now, this level, it's offering resistance. So in my view, if we're able to close above this level to a bullish candle in here, then the market is about to rip higher. In case the market decides to come back here and probably build a little bit more consolidation, you would do something like this and spend probably a few more days between 32.50, 32.60 and about 31.95 and 32 zone, and kind of build something similar before it wants to rip higher. So this is an extremely bullish move, and we're hitting you know, a pretty strong zone of supply here. So just watch the price action. I wouldn't long definitely into this resistance. I would wait for a breakout first, and then a retest of the zone, or you know, wait for a pullback altogether up here into the 132, 132.20. All right, guys. So that's in terms of the euro dollar. The Aussie, it's been pretty mad, even with some you know, weak news coming out of the Aussie land here. And although we chose to ignore this extremely nice bullish pin bar in here, that gave a pretty good indication. But see, the markets are always easier to read in hindsight. So at the time of this, you know, we were watching this one, and what kind of tricked us into this market was the fact that this leg here was the first leg down, and we were watching to sell into the wave 2 here, into the 618 and 786. But this market had this huge failure, so now we're reaping up higher. So we're taking up the highs above 105.85. We're having our close above 105.50, and if you guys remember some of the previous videos, I think we've talked about if the market moves up above 105.50 and closes up higher, we should look for this market to rip towards 110. So I'm going to squeeze this out a little bit and see if there's anything that we can have here. I'm going to get rid of these fibs because they make no more sense here. If we're watching the fibs from this latest leg down here, and with this close, the next move higher can be up here into the 127 extension, which is closer to, I didn't give me the level there yet, but it's about 106.65, and then back up higher towards 110. But this remains an extremely important level. Just kind of watch here. Like I said, all the markets are interrelated here, and it seems that the breakouts are kind of coming together in all of the markets, the S&P 500, the euro, the Aussie, a lot of the other yen pairs as well. So we are at extremely important levels, guys. So keep an eye on these developments up here, because they do matter. So if if the market breaks and closes up here, then a lot of longs will get even more bullish in here and start buying. So if we do get a failure, then it's pretty painful, and when the markets take the elevator down, you know what happens, right? So I think that's all I've got for today. There's not a whole lot. I'm gonna actually take a quick look at the euro yen here and see. Let me pull out that chart of the euro yen. Where are you? Oh, there it is. And we're going to look at the daily charts in here. You've noticed how after, and this is some of our signals that we use in here. It's the double bars. So you can see this. There's two of them that indicated a break up higher, and the break came. The only thing I would be worried about here is that I think that this might be a final leg 5 into the market. We've had this pretty strong third wave moving in here, with the fourth wave consolidation, final by a wave up higher. I think this is a fifth wave, so I wouldn't get bullish into this yen crosses, because I think that we might get an ABC correction in here back towards 113. So be very careful about getting really excited about this move, because that's what they want you to do into the fifth waves. So that's I think that's all I've got. That's all my suggestions for today. If you guys have any questions, you can find me on Twitter. You can visit us on our site at crystaltrading.net. Our Twitter is at crystaltrading or at crystal1, and we'll see you guys out there. All right, have a good week ahead, or a Friday, because that's the last one. All right, so bye bye.